All right, let's talk about it. Today, we're going to break down the 5 most common and most costly mistakes that new investors make. And more importantly, we're going to talk about how you can dodge them completely. Let's get right into it.
So I'm guessing you're here because you're ready to build your wealth, right? Of course you are. You're ready to make your money work for you, see it grow, and that's the exciting part. But, before we start building up, we have to make sure the foundation is solid.
And that foundation is really all about this one key idea. The number one rule of investing isn't about making a fortune. It's about not losing your money in the first place. Seriously, just by understanding these common traps, you're putting yourself way ahead of the game. Okay, so let's kick things off with the first 2 mistakes. These are all about having the right strategy and the right mindset before you even put $1 into the market.
Here we go. Mistake number 1, investing without a plan. This is probably the biggest one. It's kind of like hopping in the car for a cross-country road trip with no map, no GPS, not even a destination in mind. You'll definitely be moving around, but odds are you won't end up where you wanted to go.
And you can see how this all snowballs, right? If you don't have clear goals, you have no anchor. So when the market gets choppy, and trust me, it will, panic starts to creep in. And that's what pushes you to chase some risky, hot stock you heard about, which, let's be honest, usually just ends up costing you more.
The solution, thankfully, is pretty straightforward. Before you invest anything, just ask yourself 3 simple questions. What am I investing for? A house? Retirement? When do I actually need this money? And how much risk can I really handle without losing sleep? Answering these questions, well, that's your personal investment plan, right there.
This brings us right to the next big one, trying to get rich quick. Oh man, the idea of fast money is so tempting. We've all felt it. But this idea that you can just triple your money overnight, it's mostly a fantasy, and it's almost always a dangerous one.
This chart just nails the difference. We're talking about 2 totally different mindsets here. On the left, you've got gambling. It's all about the thrill, chasing hype, taking huge risks. But on the right, you have investing. That's a discipline. It's about a plan, long-term growth, and building wealth slowly, steadily, and frankly, reliably.
All right, moving on to our next section. These next 2 mistakes are about managing risk out in the market and, just as important, managing the emotions inside your own head.
This is the classic mistake of putting all your eggs in one basket. You find that one company, that one hot new tech, that one crypto you just know is going to be huge, and you go all in. It feels bold, for sure, but man, is it risky.
Just take a look at that number. A 90% loss. And let me be clear, this is not just some scare tactic. This has happened to so many people.
Because when that one sure thing turns out to be not so sure, there's no safety net. There's nothing else in your portfolio to cushion the blow. A single failure can pretty much wipe you out.
So what's your best defense? Spread your money out. It's called diversification. By owning a mix of different things, different kinds of assets, different industries. A bad month for tech doesn't sink your entire ship. You're just building a much stronger portfolio.
And now we get to what might be the hardest mistake to avoid, because this one, it's about fighting your own brain. Our emotions, especially fear and greed, are just terrible financial advisors.
Just look at this breakdown. The emotional investor, they get caught up in all the hype and buy when prices are at their peak. Then when the market dips, fear takes over and they sell everything at the bottom. They literally buy high and sell low. The disciplined investor, they do the exact opposite. They stick to their plan because they understand markets go up and down.
Okay, that brings us to our 5th and final mistake. And honestly, this one is the habit that really supports all the others.
So here it is, not continuing to learn. Look, making your first investment is a huge step, but it's the start of the journey, not the finish line. The financial world is always changing, and if you think you know it all, well, that's usually when you get into trouble.
The best investment you can ever make is in yourself, in your own knowledge. And the great news is there are more resources out there than ever before. Whether it's reading books, listening to podcasts, taking a course, just building that habit of learning is what really makes the difference long term.
Okay, so we've looked at the 5 biggest mistakes. Now let's wrap this up by flipping them around to create your own simple, powerful blueprint for success.
When you boil it all down, it really comes down to these 5 things. Think of them as the 5 virtues of a smart investor. Instead of jumping in blindly, you become a planner. Instead of chasing a quick buck, you practice patience. You use diversification. You stay disciplined, and you never, ever stop learning. That's the path.
Ultimately, if you remember just one thing from all this,
Let it be this simple truth. Real, lasting wealth isn't built overnight. It's the result of smart, consistent choices made over a long, long time.
So I'll leave you with this final thought. The absolute biggest mistake is letting fear stop you from ever getting started. But the second biggest is starting the wrong way. You now know the pitfalls, you know the path. So the only question left is, which one are you going to choose?